Hi, this is Jay Rosenberg of Arrival Capital Management on the Arrival Capital channel on YouTube with an investment update. At the time of our last investment update back in late February, the market was in the midst of a steep sell-off. During that time, a whole host of reasons were given for investors to flee the markets and head to the sidelines. As usual, any decision made in a state of fear to sell off long-term investments was almost certainly incorrect. As is our philosophy, during that time, Arrival Capital was buying, not selling, looking to seize opportunities for Arrival clients. In fact, the late February sell-off was precipitated by a decline in the Shanghai stock market in China. Then, in a few weeks, that market recovered all that it lost. What a shame then if for any long-term investors who sold off solid investments and incurred a tax liability for such a distant and obscure reason. The first quarter of 2007 was largely unchanged for the financial markets and the major market indexes. Arrival Capital clients, almost all Arrival Capital clients, did somewhat better. But the headwinds provided in the financial markets kept gains well below those experienced in the past 6 months. In fact, the late February, early March sell-off was probably caused by the need for financial markets to digest recent gains and then incorporate incoming data about the economy and corporate earnings. Whatever the overall market environment, there are almost always good investment opportunities to be found if you know where and how to look. Often, opportunities hide in plain sight. For example, those companies that have been performing well are reasonably valued and have good long-term industry trends and fundamentals, and then are driven down by an unrelated market sell-off, are good investments to make. In fact, last time I said that energy, metals, materials, these companies have been doing well for the past couple of years and continue to have great industry fundamentals and great tailwinds, but have been driven down by the overall market sell-off. Were still solid investments, and in fact almost all of them have regained what they lost and continue to move higher. Another good place to look for sound long-term investments is among those companies that have undergone tough times and are undergoing a restructuring or re-engineering of what they do and how they do it. As long as that restructuring and re-engineering is done well, these often prove to be great investments, whatever the overall market conditions. And these types of special opportunities have the added advantage of often being of interest to private equity funds who are looking to take companies private. The bottom line is to keep a clear head in both good market times and bad. Every quarter or every month can't necessarily be a great one, but putting together a portfolio of carefully managed investments of good long-term value will almost always build wealth over time, whatever the overall market conditions might be and during changing economic times. We at Arrival Capital are here to make those kind of investments for our clients, and we thank you for your confidence and for your attention.